Okay, fairly involved question here, kind of help you navigate, hopefully will help you navigate the balance sheet a little bit better. And forgot to include the title of the exercise, so I just wrote it in up across the top of the sheet here, and it is reconciling changes in balance sheet accounts. Okay, so they want a little bit from us. And this is an exercise that would be fairly difficult, I would say, for a beginning accounting student. But that's why we have these videos, right? So we can see how it's done and hopefully be able to learn a little bit of something from it. So it says the following table presents selected items from the 2014 and 2013 balance sheet for this company, Golden Enterprises, and as well they include the 2014 income statement, or at least selected items from the income statement. Okay, so we have the, and they list this for you right here and here. We have the 2014 balance sheet data, selected data, 2013 selected balance sheet data, and selected data from the 2014 income statement. We have all of these items. So everything over here is an income statement item, everything over here balance sheet. Okay, so lots of numbers and some additional information. It says Golden Enterprises reported expenditures, that means we bought some stuff, for property, plant, and equipment of $5,559,183 in 2014. Okay. So requirement A says, what was the original cost of the property and equipment that Golden Enterprises sold during 2014? Okay. Well, our starting point here, we're going to need all three numbers. And so this is that we're going to need three numbers. I say all three. There's a lot more than three on the page. We're going to need our property, plant, and equipment cost. This is our historical cost on the balance sheet for 2014. Our historical cost for property and equipment for 2013. And also going to need our expenditure amount. Okay, so just eyeballing this, I can tell that this number here is bigger than the difference between these two numbers here. So let's think about this. If we hadn't gotten rid of any equipment, if we had $80,132,394 in property and equipment in 2013, and then we added to that, well, we would expect this figure here to be something like $85,700,000, something like that, but it isn't. It's less than that. So the way that I would do this is I would take the amount of the expenditure and I would start there, $5,559,183, and I would subtract from that the difference between these two numbers here, $84,777,771, okay, minus $80,132,394. All right. Let me give me 1 second here. Let me fix this real quick. That wasn't real clear what I had written. Okay, so let's bring the calculator over here. Looking just right here right now. I'm going to start right here. 84,777,771 minus $80,132,394 equals $4,645,377. So now all we have to do is, well, I'll just start over. 5,559,183 in current year expenditures right here. They tell us that right there, minus the change right here, $4,645,377 tells us that our original cost is $913,806. All right. So give me 1 second and let's move that calculator out of the way for just a moment. It says, what was the accumulated depreciation on that property and equipment at the time of the sale? Okay. So here's the thing. We're going to need to use both the income statement and the balance sheet to figure this out, right? And so what I would point your attention to is depreciation expense on the income statement and accumulated depreciation for 2013 and 2014, all right? So again, I'm just eyeballing this and I can see that this number is bigger. So I'm going to put my figure for depreciation expense, $3,184,956. That's our non-cash expense over on the income statement. And I'm going to subtract from that the difference between these two numbers. So my accumulated depreciation, in other words, if we hadn't sold any assets, what we would expect is that this figure here would just go up by the $3,184,956. But I can tell by looking at it that it didn't. So $60,136,353 minus $57,852,770. And so let's see what that is, because I have no idea. 60,136,353 minus 57,852,770 equals 2,283,583. So now all I have to do is I'm going to take my depreciation expense. This is basically what we did in the previous step, $31,84,956. That's my depreciation expense minus the change in accumulated depreciation. Gives me $901,373. So what we're essentially saying here is this equipment that we sold was almost fully depreciated. Our original cost was $913,806, and we had accumulated depreciation on that of $901,373. Now we need to keep that in mind because it's going to help us here in a moment with our next question, I believe. It says, compute the cash proceeds from the sale of property and equipment in 2014. Okay, so how much did we get? All right, well, we can look up here and we can see that we have a gain on sale of property and equipment of $89,483. But this is just the gain portion. If we want to get our full answer here, what we have to do, and we can do this a couple of different ways. I'm going to do it like this. I'm going to start with my original cost of $913,806, and I'm going to subtract from that the accumulated depreciation. And what I'm doing here is I'm calculating my book value for this asset. So let's do that. 913,806, that's our original cost, minus our accumulated depreciation of 901,373 equals a book value of $12,433. So all we now have to do is just add the amount of the gain, okay? And since we don't have to clear out anything, we can just go ahead and plug it right in. 89,483 gives us $101,916. Okay, so what we're saying is we sold it for $101,916, but we only recognize the gain on the portion that exceeds the book value. So our book value was $12,433. We sold it for $101,916, and the gain, which was actually given to us, is $89,483. Okay, so notice we have a couple more requirements down here at the bottom, but this video is over 12 minutes already. So what I'm going to do is I'm going to close this out, and I'm going to start a new video for requirements C and D on the same exercise.